Q2 earnings are out for JD.com, ticker symbol JD. So let's do a complete analysis on the business. Year to date, they are only down here 16%, which is positively impacted from the 32% stock hike from the March earnings cycle, which means we are now sitting at a PE of about 16 after you do some calculations, a market cap of 91 billion, and a dividend yield of 0%, although they did just pay a special dividend to shareholders after a great quarter. So let's do an analysis to see what's going on with JD.com, what's impacting all the valuations, and see how everything's progressing so far for fiscal 2022. All right, so here we have the press release for this Q2 earnings results for JD.com. Let's start with the comments made by the CEO. They said, due to their resilient business model, industry-leading supply chain capabilities, and efficient operations, it helped them deliver solid results amidst ongoing challenges in the external environment. So we know what they're talking about there. That translates into increased mind share, stronger user engagement, and expanding user base. So all in all, the company is progressing well, especially in their core business. And they plan to continue to serve their business partners, etc., and their customers in order to innovate and support China's long-term growth. All right. Additionally, what they mentioned here is that their top line, bottom line growth, etc., cash flows, all of it has actually outpaced the industry during this challenging period. And this allowed them to, repurchase more shares and issue a special dividend, which we talked about at the top of the video here. And they're going to continue to focus on generating strong shareholder returns while investing for the future. Okay, so that is the future state of the business in a nutshell. Let's do a deeper dive into the numbers here. So as discussed, the solid growth momentum carries on throughout their business, and their net revenues, as you can see, is up year over year. And we can see this across the board. Net service revenues breakdown, product revenues breakdown, etc., etc. And now we get down here to our diversified businesses here for JD. Their core business, JD Retail, is up 4%. Their JD Logistics business has been growing quite substantially at 20%. Their newer businesses, these are actually down 10%, but this is definitely something that you can anticipate from newer businesses, especially in this economic environment. And that leads us to our resilient core profitability here. And they mentioned that their drivers of profitability are essentially their increasing economies of scale, fast growth from marketing, financial discipline in investment and spending. And then they said the only drawdown really is their investments in logistics and new initiatives for incremental opportunities. But that is typically what happens with your investments, as there is some risk involved with it. All right, now let's take a look at their income statement here. We pulled on all of our revenue segments here from their different businesses, and we can see year-over-year growth across the board, besides a slight slowdown here for their new businesses. And we're left with total segment revenues of $267 billion in renminbi. When we compare this to the US figure, it's actually about $40 billion here. But again, we want to be able to compare this quarter over quarter, so we're going to use their renminbi figures here. Okay, we deduct some expenses that haven't listed it here, but I'll show you them in just a second. And we're left with an operating income here of $8 billion renminbi. And after we've added all the numbers up, total consolidated operating income here for JD.com is 3.7 billion renminbi, or $561 million US. And so just to add a little more color here to the financial data, so what we see here is our cost of revenues, right? This is what we're looking for in the last figure. Their cost of revenues are actually 231 billion renminbi on the 267 billion in revenues. Okay, so we're eating up a substantial amount just to produce those revenues, and that's why after we deduct for fulfillment, marketing, research, development, etc., we're only left with about 5.7 billion renminbi for their income from operations. And it's the reason why their margins are actually quite low here. But when we look at this from a historical point of view, we can see that actually the cost of revenues have actually fluctuated in this area here of 200, just less than 200 billion renminbi to, 230 billion renminbi. So if that stays relatively flat and the revenues can consistently grow year over year, then the margins can expand, and we should actually see a nice stock appreciation here for JD.com. Now let's jump into the balance sheet here. We have cash and cash equivalents here, $11.7 billion US. We'll use US figures here because we don't need to compare it. Restricted cash and short-term investments, let's total it up and say they have about $30 billion in cash on the balance sheet. What about their debt figures here? We'll scroll down and we can see here current debts of about $2.5 billion. They do have a decent amount of accounts payable here, but we won't add that to our calculation. And then we have long-term debts here of $1.5 billion and $2.2 billion respectively. Let's say altogether they have about $6 billion in debt. So not an issue here at all for JD.com. They have a very secure liquidity position at this current point in time, so that's a check mark on the balance sheet. And now finally, let's take a look here at the cash flow positions. We have net cash provided by operating activities for this quarter, $33.6 billion renminbi. Deduct our capex figures here, and we're left with about $30 billion in free cash flow to reward shareholders. Now this is renminbi, this is not US dollars. And if we're using US dollars for our calculation, we're going to use this 4.5 billion in US dollars. All right, so if we jump into our calculator here for JD.com, analysts are projecting that they'll come in with about $1.50 in earnings per share by the end of the year to $2. So let's be conservative. You know what? Let's put in $1.75 just so that we get a medium case here on a 10% expected return. They do not pay a dividend besides the special dividend here. Let's assume they can keep these 5-year revenue growth estimates in line here, and they can grow at, let's just say, 20% for the first 5 years here on the back of the strong earnings results that they've recently had. 15% for the 5 years after that. On a 15 PE, the stock would be worth about $48 per share. Now, if we can reach these 30% growth metrics year over year for the first 5 years, and that drops down to about 25%, we really explode here off growth on a 20 PE, then we could be sitting at $134 per share. Mind you, we are sitting at $57 right now, and this is one of those stocks that has not actually declined all that much despite all the economic challenges that are going on. While the rest of the market is down, north of 50%, they're only down 16%, so there might be some strength here underlying in this JD business. Now, let's assume the worst case scenario happens. Competition comes in, obviously. China goes through a massive recession here. They're not able to grow at the metrics that they thought they would. The business is only growing at 4% for the first 5 years, and then that declines to 0% on a 10 PE. The stock would be worth $9 per share. Now, the stock is trading around price to sales and price to book ratios. Price to free cash flow is about 13. So that's also not that bad, because a lot of businesses do have very, very lofty price to free cash flow numbers. So when it's lower, that means you're pretty much buying this business at a margin of safety here. But for JD, let's actually jump into the stock chart here. And what do we see from a technical perspective? Well, we're bouncing off this $45 price level here, and we've actually run into resistance here around $68 to $70 per share. And thus we started to head back lower. So we're at an interesting point here for JD. If you're interested in investing in this business, you're going to want to see how are the new businesses coming along? How is the competition? Will they be able to jump back into higher growth numbers here, start to achieve higher rates of profitability, etc., because if so, this stock really could appreciate here back up through all-time highs up to that $134 figure that we were looking at. If not, we can actually expect this stock to head lower here into supports of about $36 per share. But that's the analysis for JD. If you enjoyed the analysis, please leave a like and subscribe, and I'll catch you on the next one.